kind of like a stock that steadily works its way higher year after year after year without making much fuss. Take Intuit, I-N-T-U, the parent company of TurboTax and QuickBooks, and Mint, the latter being a personal finance app. This kind of software for bookkeeping and filing your taxes has been growing steadily for ages as part of the digitization of everything. No wonder the company keeps reporting strong results and its stock just keeps climbing. 5 years ago, Intuit was trading at $60. Now it's at $197. It's up over 25% year to date, on top of nearly 40% in 2017. Not bad for a virtual accountant. And Intuit continues to deliver. The company reported again last night and gave us a nice top and bottom line beat. I'm getting spoiled here, with management also raising their full-year revenue guidance. At this point, the only real question is whether the stock has run too much or whether it's got more ahead. So let's check in with Brad Smith. He's the chairman and CEO of Intuit. Get a better sense of the quarter and where his company's headed. Mr. Smith, welcome back to Mad Money.
Hey, Jim. Thanks for having me back.
Well, Brad, you did it again, except for this one may have been very special. You had some incredible accelerated revenue growth. What were some of the components that really shined in from your point of view?
Well, thank you, Jim. First of all, I do think this was very special. The team did a great job this year. The strength was across the company. We saw 15% revenue growth in our consumer business. We saw 16% revenue growth in our small business and self-employed, but the real breakout star was our consumer tax business. This was a crazy year in tax. You know, the government passed the tax legislation late. The IRS opened up for business late. As a result, we had to get our product ready, but they got out there. They produced a killer product. We picked up market share. We grew the category, and we delivered results that were 15% revenue growth versus guidance of 7 to 9%. So it was a really good year for our tax business.
Well, we got to talk about that because there were people on the conference call who were kind of in disbelief. Some I felt kind of thought, well, hold it, they knew it was going to be about 10, 11, and they just gave us low guidance. But this was actual organic demand, correct?
It sure was. In fact, we saw an opportunity to take additional share in the do-it-yourself space, which is where TurboTax has historically competed. But this year, we launched TurboTax Live, the ability for those tens of millions of people who have a nagging question in the back of their mind to basically touch a screen and get access to a tax pro and have that tax pro show up at their convenience. And we saw TurboTax Live accelerate our category growth and actually triple our average revenue per customer for that particular product.
Now, there was a skein of thought which said, well, you know what, next year it's going to be easier. People are going to be doing some standard deductions. They won't need you as much. But you parried that by talking about another product, right?
Yes, that's right. That is TurboTax Live. And the reality is, in the U.S., about 155 million people file taxes. 90 million of them go to a tax store or a CPA. And with tax simplification, more of them are now going to have confidence that maybe they can file their taxes on their own at a much lower cost. And now that we introduced TurboTax Live, they don't have to be worried about being alone. They can touch a screen, have a CPA come right into the software and help them through the tax return. So we think this is going to be a huge catalyst for the category and for our company.
You talk about the idea that there are still people who do spreadsheets manually. There are still some people who use a shoebox. And there are people who actually put put pen to paper. How many people are really still left to do that?
Over 40% around the globe. Small businesses still rely on paper receipts. They use spreadsheets, shoe boxes, anything they can do to try to get that out of the way so they can get back to doing what they love to do, which is running their business and serving their clients. So it's a huge opportunity for us.
Now, this QuickBooks Online, I mean, it's a staggering gain that you had. How do people know about this? How did people even, I mean, the accountants must all be working for you, I have to feel.
Well, I think we work for the accountants, but the truth is, it's really hard when an accountant receives a shoebox and the small business says, sort this out for me. So the accountants are one of our absolute best ways of getting the word out on QuickBooks Online. But also other small business owners recommend it to other small business owners because they'll say, how do you deal with this stuff? I don't want to focus on paying bills or sending invoices. I simply want to build this product or deliver this service. So the way people learn about this product is word of mouth from other small businesses, from accountants, or they go online and do a Google search and they find our product at the top of the category.
Well, I can tell you as a customer, even I can figure it out, which says something because this isn't easy to do. Brad Smith is president and CEO of Intuit. Congratulations, sir, on a great quarter.
Thank you, Jim.
This stock goes higher. Brad Smith knows what he's doing. Mad Money's back in for the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.